At some point far in the future, historians will probably ask, what was daily life like in the early 21st century? Well, one thing we know for sure. Nobody will ever point to these two clowns and say, this was how you should have been stacking Benjamins.
Live from Joe's mom's basement, it's the Stacking Benjamin Show. I'm Joe's mom's neighbor, Doug, and today on the show, we're celebrating the anniversary of the first radio broadcast in the United States by doing something completely crazy and bringing you this episode via the internet completely free. Not only that, with the stock market roller coaster lately, we thought it'd be a great time to talk investor psychology. How do people think about the financial markets? Here to help us, we welcome financial therapist Kine Corder. And from the Mapped Out Money blog and YouTube channel, Nick True. Plus, from Afford Anything, Paula Pant. But that's not all. In our Friday FinTech segment, we're talking about # No Spend November with Kristen Holt and Dusti Young from the nonprofit group Greenpath Financial Wellness. Plus, we'll answer a listener call for help and save time for my amazing trivia. And now, a guy we refer to as one half of the Laurel and Hardy of the financial podcasting world. Nobody refers to you that way, Joe. Joe Saul-Sehy.
Paula Pant has no idea who Laurel nor Hardy are.
I do know who they are. In fact, I used to watch their videos when I was a kid. So are you Laurel or are you Hardy?
I'm the thin one. Whichever one.
Whichever one that is. Okay, one of them was named Oliver. The not thin one was named Oliver.
I can say I'm the thin one, Paula, because OG's not here. So I get to pick the one that I want. Hey, everybody. Welcome to Friday on the Stacking Benjamin Show. I am Joe Saul-Sehy, Average Joe Money on Twitter. And that voice on my dad's shortwave radio here in the desert, I believe, it is Paula Pant.
It is totally Paula Pant, and I am so familiar with Laurel and Hardy, you don't even know.
That is, in fact, crazy. We're making a reference that you actually know. It's creepy.
It was from one of their videos that I learned the joke that I will never forget. It's a one-liner. It goes, I haven't eaten in 3 days. Yesterday, today, and tomorrow.
and there we have Paula's joke.
I'll be here all week, folks.
Yeah, tip your wait staff. And somebody waiting for that to finish so that we can introduce her back to the airwaves again in, I believe, Atlanta, Georgia. It's Kine Corder.
Yay! Hey, what's up?
How are you? So glad you can be back with us.
Thank you for having me back. I'm awesome, like super awesome right now.
I thought you were saying it's our job to say you're awesome, but you are awesome.
Oh. Right. Yeah. My boyfriend gets on me about that all the time.
So for people that missed your first appearance on the show, tell everybody about what you do. You're a financial therapist?
Yes. I'm a financial therapist and hypnotherapist, and I help people reconcile their emotions around money.
And people have a ton of emotions around money. In fact, we dig into that your first time that you were on the show, and I'll link to that in our show notes because the work you do is just absolutely fascinating. And we're going to talk a little bit about that today. But we've got somebody else we got to bring to the airwaves. He's usually in an RV somewhere near you, but I believe he's not in an RV right now. From Mapped Out Money, it's our friend Nick True.
That's right, Joe. I'm currently visiting my parents for a couple of days here outside of Chattanooga, Tennessee. But normally I am absolutely in my RV full time.
Yeah.
For the record, I have no idea who Laurel and Hardy are. So I'm out of the loop on that one.
We forgot to ask Kine, do you know who Laurel and Hardy are?
Yes, I'm a lot older than I look.
But still nowhere near as old as Laurel and Hardy, because that's an old reference. I mean, that's an old reference. Good. But Nick, tell everybody about Mapped Out Money, because I love your YouTube video channel especially.
Yeah, so I basically talk about personal finance, mostly geared towards 20-somethings, how to manage your money and budget your money. I love talking about the emotions and money stuff as well, so I'm super happy to be on this show. And yeah, my wife and I have been on the road for about a year full time, and so I don't talk about like RV maintenance or anything like that, but I definitely work in the travel angle and try to share some of where we're heading and what we got going on along the way.
Someplace, Nick, where 20-somethings can go to save about $450?
I think I may know what you're talking about, Joe.
If they head to stackybenjamins.com/magnify money, because at Magnify Money, they have more than 90%, Nick, of all those banking products you use every day in one spot at Magnify Money. How great is that?
That's awesome, Joe. It's right. And I bet being millennials, we'd probably do it on our phones. I bet we wouldn't use the computer to go to stackybenjamins.com.
I probably wouldn't use my computer. I just take your thumbs and go stackybenjamins.com/magnify money, whether it's checking accounts, savings accounts, refinancing your student debt, getting your act together with your credit card game, whatever it might be. It's all at Magnify Money. And I'm so happy that we are also supported by Slack. Kine, do you use Slack?
I do, actually. Well, I'm pretty proud of it because I am not millennial.
That should be their tagline. You don't have to be a millennial to use Slack.
That's true.
Slack's a collaboration hub for millennials and non-millennials for work that makes sure the right people in your team are always in the loop and key information is always at your fingertips. Learn more at slack.com. We just made them a new tagline, I think. Slack, you owe us for that. We've got a great show, though. We're going to talk about financial emotions with this roller coaster of a stock market we've been in. So let's get this party started.
Hello, darlings. And now it's time for your favorite part of the show, our Stacking Benjamins headlines.
And our headline today comes to us from the Option Alpha blog. We've never talked about the Option Alpha blog written by our friend Nick Duplessis over there. The 14 stages of investor emotions and trading psychology. Nick writes, markets have defined and specific cycles. This is because investors and traders are emotional whether we choose to be or not. And I want to stop right there, Kine, because let's go to the financial therapist. I love this line. We're going to be emotional whether we choose to or not.
Yeah. And it's partly true in the sense that it's kind of like your breath. You're going to breathe, but if you wanted to hold your breath, you could. So emotions are that same way. They're going to happen, but if you want to manage them, you can.
Well, that sounds interesting because when you say you can hold your breath, at some point it becomes involuntary, meaning that if we compare that to emotions, I guess what you're saying is if you hold your emotions in, they're still going to spill out. Are you inferring that?
No, but it does sound like that. It's the other way around. If you learn how to manage them, you know how to release them so that they don't come spilling out, because you can hold them in and then they are going to erupt at some point.
Yeah.
But if you learn how to manage them, you can slowly release them in the right way rather than being controlled by them.
He writes, everyone has the best of intentions when entering this business, right? We all want to make a ton of money with as little risk as possible. Who doesn't? Where some traders fall short is they fail to recognize there are predictable and repetitive stages. The markets do not exclusively depend on company or industry specific data and earnings. If it did, then stocks would trade exactly at their values and there would be no movement at all. I love this idea, Paula, that a lot of the motion he talks about drives not just trading, but drives share prices.
Yeah, absolutely. I mean, share prices are in part a reflection of what people and algorithms think that companies might do in the future. And I use the word think, but really so much thoughts and feelings are intertwined. So there's a big component of if there is fear or giddiness about what a company might do in the future, that gets reflected in the stock prices because it affects the way that people buy and sell.
And Nick, when it comes to 20-somethings, I mean, most 20-somethings haven't lived through a downturn yet. So talking to them, I think, about stocks has been fairly easy because the market seems to go up all the time. What are you seeing now with 20-somethings?
Yeah, Joe, it's definitely been easy to even just convince some of my friends from college to invest and say, hey, look, this is why you need to be doing this. And it's been fun because guess what? A couple of years ago, they've been going up 10%, 20%. It's just growing like crazy. So it's really easy for them to keep pouring in. But definitely over the past few weeks, I've even started receiving personal texts, from friends saying, hey, what are you doing? Because they know I'm into this stuff. Are you still investing? Are you pulling out? Because it's getting shaky. And I'm starting to see more people not, want to stay in or get nervous because we haven't lived through 2008. I was a freshman in high school in 2008. So I remember my parents talking about it, but, I wasn't personally affected. So it's going to be interesting to see what my generation does when it really does take kind of a major downturn.
I just noticed, by the way, his name is Kirk Duplessis. And sorry, Kirk, I called you Nick. I'll call Kine here, though.
That's right.
You're welcome, Kine. I'll call you by your name. When you think about the stuff that Nick's talking about, though, I mean, there's a lot of people experiencing these emotions for the first time with the stock market because they've never been in this situation. How do you get away from that? I feel like people kind of are making up how they feel because it's their first time experiencing these certain circumstances.
Yes. And what a great point. And here's the thing. You have to feel it first. There is no circumventing emotions. You got to feel the emotion first in order to know how to manage it later. So, and Paula made a good point. Feelings and thoughts go really close together. You have the feeling and then you have the thought. And, and sometimes the other way around, the thought comes up and it gives you even more of a feeling. So you've got to feel it first before you can learn to manage it or name it. Because you got to have it in order to name it. And if you can name it, then you can tame it.
What do you mean then by name it? Because what I'm feeling you say is you got to feel the feeling and then kind of step back away and go, whoa, what the hell's going on?
Exactly. So was it fear? Like what was it that I was feeling? Oh, that was fear. What was it that I was feeling? Oh, that was greed. Now I know what that looks like. I can name it. And now I know how to tame my greed. Like now that I know what the name of it is, I've got to put some skill around taming my greed or fear or whatever the emotion is.
Paula, Nick said he was in high school during 2008, which is why he doesn't get the Laurel and Hardy thing. But
Dude, I have never felt old on this show before until he said that. When he said that you were a freshman in high school, Nick, in 2008.
Yes, I was.
I had graduated from college and had already been in the workforce for 3 years. Jeez. And I'm just turned 35. So yeah.
Yeah.
Yeah, that doesn't make me feel old at all. I think my kids, Paula, were like in middle school.
That's what I was about to say.
By that time. Like whatever.
Yeah, my daughter was in high school. My daughter was in high school in 2008.
Yeah.
Wow. Multi-generational roundtable here.
But I think that's interesting though, Paula, because I mean, everybody's riding the same roller coaster together. This would be, if this roller coaster continues, this would be your second one. How did you fare through the first one?
Oh, the Great Recession. Initially, I learned the hard way. As it turns out, the stock market is not a high-yield savings account. It's who knew?
You need to say #spoiler.
Yeah. So I definitely learned that the hard way the first time around. That being said, maybe because I was young, I guess I have no way of controlling that experiment, but I will just go out on a limb here and say, because I still recognize that I was young and I had 40 plus years ahead of me, even though I suffered losses, I was enthusiastic about buying as much as I could at the bottom because I could read the headlines. I'm literate. And I knew that this was a recession of epic proportions and that meant a buying opportunity.
How did you know that though, Paula? Because one of the things I think myself and then a lot of my friends and people my age struggle with is that patience aspect. I know that it's 40 years, but it still how did you come to grips with that though? Because I think that's hard to think that long term.
Yeah, I was thinking totally in terms of a 30 to 40 year time span. So I had no concept that 10 years into the future, this investment would make money. I was purely thinking long term. And I remember, and I was thinking about that both in stocks and rental properties, because I remember when I bought my first rental, part of my thought process, I was like, well, in 30 years when this thing is paid off, maybe I'll get some cash flow. I wasn't even thinking about the fact that I could make cash flow anytime within the next 30 years. So I think to answer your question, the thing that helped me a lot was having that 30-year horizon from the beginning. I think when you're young, it's easier to do that because when you're 25 and you think 30 years out, okay, 55, you know people who are that age. That's not like being 95, which can be hard to imagine if you've never met somebody who's 95, right? You've met people who are 55. So that makes it easier to imagine being that age.
It's interesting. I'm going to go back to Kine for a second, because then I would think, if you agree with what Paula's talking about, Kine, that time kind of plays a factor in this. If you don't have that 30-year time horizon, you may worry a lot more about making it back quickly.
Yeah, that, and it depends on what you value. So if you are valuing time, which some people do, I value time, then that is going to make me a lot more emotional. But if I value, like I can stomach a risk. Like if I can stomach a risk, then I'll go all in later, kind of Vegas style. I'll go all in and I'll make this back. So it depends on what you value, rather where your emotions are going to be. If you're going to say, oh, I'm risky, so I know that I'll get this back because I'll be ready for the next one or whatever, then if your values are there, then that's going to be one emotion. But if your value is in time, then you're like, F.
Yeah.
Right.
Right. I know where you're going with that.
Yeah.
He walks through the 14, he being Kirk or whatever I want to call him, Nick, whoever. Kirk walks.
We'll just call him John.
Yes. Kirk walks through the 14 stages of trading psychology. I saw this back when I was a financial planner, and I think it's fascinating because it walks through these different emotions. And Nick, I want to come to you. He starts off with optimism. Trader thinks that there's a hunch or a positive outlook that leads people to buy stuff. Then excitement when it goes up, things are moving your way. You get giddy. Thrill is next. The market continues to be favorable, and we can't help but start to feel a little like we're pretty smart. Fourth is euphoria. That marks the point this marks, he says, the point of maximum financial risk. But you're feeling so much euphoria that you start to ignore the basic concept of risk. And then we turn to anxiety as things start to go down. But do you think your friends ever felt euphoria, Nick, or the people that you write for felt euphoria? I didn't really feel a euphoria in this up market. I mean, except among a few of the same idiots you hear in every market.
Yeah, I don't know. I mean, I'm sure that they did. I can tell you, actually thinking back on it, Joe, this makes me think of a story about 3 years ago when I first got started with investing, before I really got into some of the more index funds and I guess my more conservative, well thought through approach these days, is I bought Amazon back when it was around $400 a share. It quickly went up to around $600. I bought it just before Christmas season. It went up. I thought I was like, what am I doing in college? Like, I got this investment thing licked, I'll just do this. And so I remember feeling a little bit euphoric back then. And then all of a sudden, things went down. And that year was a pretty bad year for Amazon. And all of a sudden, it went down and dropped down. I remember it getting in the 200s. And so all of a sudden, I was down 40%, 50% of what I had bought in at. And then I was not happy. And on this chart that we're talking about, I was in the way underside over there, not feeling good at all. Yeah. And Joe, unfortunately, I ended up selling that Amazon stuff because I couldn't handle it. I finally waited around about a year. It got back to around 400. I sold it for basically made my money back. I didn't lose. I didn't gain. And I don't know if you've looked today, but Amazon is now trading around $1,700 a share. So I basically knew nothing about what I was doing and completely let my emotions drive that. So I've been all through this phase.
You walked right into this same psychology. You walked the whole thing, because after euphoria, you go to anxiety, then denial. Well, the markets don't turn around as quickly as we'd hope. There must be something wrong. We think to ourselves. And then fear, reality sets in that we're not as smart as we thought we were. Nick thinks that maybe he needs to stay in college. And then desperation, all gains are lost, and we had our chance to profit and we missed it. So now we start to think, how can we bring our positions back into the black? Then panic, then capitulation. We reach our breaking point, and despondency. We exit the market and we don't want to buy stocks ever again. The markets are not for us and should be avoided like the plague. Back to you for a second, Nick. You sold Amazon, but how did you avoid that step, the despondency of, you know what, I'm done with the stock market completely?
To be perfectly honest with you, Joe, I came across this site. It was called Afford Anything. And I started reading about how to actually invest and how to actually think through what you're doing. And that led me to a couple other places, which eventually turned me on to index funds. So ultimately, I got rid of my day trading account after selling that Amazon stock and went over to Vanguard and bought the whole broad market. And things have been a whole lot better for me emotionally ever since then.
And back then, you didn't even know about her Laurel and Hardy acumen.
I know.
That's like icing on the flipping cake, Nick.
And I got to say, that was a very therapeutic question, Joe. That was right. And like, as a therapist, I was thinking that question.
Really?
And then you hit it. Yeah. I was like, oh, wow. Cool.
I'm not a therapist. I just play one on the radio.
Right. He's been hanging out with Kine a little bit behind the scenes. You've been teaching him.
I'm rubbing off on you.
That is awesome. I'm trying to keep up. But Kine, you see people that are in these stages, these bottom stages, this fear, desperation, panic, capitulation, despondency. How do you come back from those?
Yeah, right now I'm getting that a lot, of course, a lot of that. And so we put together a money mission statement when they're logical. And it's in black and white, and they write it out. And, what is it going to look like? What do they want? What are their emotions? Like, be very clear. We put it all down. And then when these times happen, I just go right back to the money mission statement. And I'm like, let's read the money mission statement. Okay, you said this. Now I need you to act on that. What do we need to do right now for you to stick to your money mission statement? And they're like, well, I don't want to. And that was then, and times have changed. And I'm like, okay, I get that. But let me ask you this. In the event that you break these vows to yourself, because that's what you're doing. If you break these vows to yourself, what other values are you going to break? What other values are you willing to break? What convictions are you willing to give up right now? And then they're like, well, why do you have to put it like that? Yeah, because that's what it is.
That's exactly what it is.
Why you got to go and be so hard on me?
Whoa. It's funny because this spot at the bottom that Kirk talks about, despondency, says that this is actually the point we exit the market. We're sick of it. We're never going to buy again. He says this is actually the point of maximum financial opportunity. And Paula, you seem to have naturally, I had to learn this working with families on their financial picture to kind of reverse this and feel the way that, this is really opportunity. And this is when everybody else is euphoric. I feel like, oh God, it's all going to end right now. But you did that naturally. How do you do? Was that willful or was it just in your DNA, Paula?
Well, I mean, during the Great Recession, everybody kept saying, oh, this is the worst thing that's happened since the Great Depression. And so I just thought back to, all right, if I had bought stocks after October 29th, 1929, like if I had bought stocks in like January 1930, how well would they have done if I had then just held them until the 1960s? So that was my thinking, was if what people are saying is true, and this is the worst thing that's happened to the U.S. economy since the Great Depression, then looking back on history, what should a person have done after the markets fell? The answer is clearly buy and hold.
Well, but what am I hearing there, Paula? Am I hearing a little bit of education about how the economy actually works?
Yeah.
Is that what you're saying?
I guess, but I mean, it's not a very sophisticated education other than just look at a stock market chart over the last 100 years and extrapolate from there.
But seriously, I mean
it's very simpleton, though. I mean, if you think about it.
Yeah. And by the way, I know what you mean by that. I think that's an awesome statement. But what do people mean? Well, you're talking about Sir John Templeton.
Sir John Templeton and his way of thinking. That's exactly what he did. So, yeah, I mean, that's the thinking process. And I mean, I think you're discounting yourself a little bit. It's brilliant.
Thank you.
Yeah.
And Sir John Templeton, just to be clear for everybody, what he said was, if everybody goes right, then I automatically go left. I automatically go the opposite. I automatically think if everybody thinks things are going well, I think they're going horribly. Like I just automatically think the same thing. And it's funny, for the past several years, I've thought, when is it going to reverse? But then we still make fun of all these pieces that say the market's going to reverse tomorrow. Because I mean, who the hell knows when things are going to reverse? I love this piece. I'm going to link to it on our show notes page at stackingbenjamins.com, because I think everybody should see this wave of the emotions between financial uncertainty and the point of maximum financial risk and the point of biggest opportunity.
Yeah, I want to point out, too, that it came back around, because I hope that when people look at it, they see that it starts at optimism, but it ended at optimism as well.
Oh, good point. Yeah. No, I was going to leave it at despondency.
All doom and gloom Joe over here. Doom and gloom Joe.
The stock market ends up sucking for everybody.
We all regret that we didn't put everything in gold.
That's right. Where's our friend Len when we need him, right?
Oh, geez.
This is normally where we do our Friday FinTech segment, but guess what? Getting into the holiday season means it's the time of year when we spend the most money, probably the most dangerous time of year, which is why when I was just searching around, I found this cool program going on, #NoSpendNovember on social media. And it's our friends over at Greenpath Financial Wellness, a nonprofit that provides financial counseling, education, and products that empower people to lead financially healthy lives. They're leading the charge here, so we wanted to talk to them specifically about No Spend November. So let's walk over and talk to them on My Dad's Shortwave. Let's say hello to Kristen, Holt, CEO at Greenpath Financial Wellness, and Dusti Young, Partner Relations Specialist at Greenpath. And instead of a Friday FinTech segment this week, I'm super excited because on My Dad's Shortwave, we're going to be talking about a concept called No Spend November. Doesn't that sound fun with the holidays coming up? And here to help us explain it are my new friends from Greenpath Financial Wellness, Kristen Holt and Dusti Young. Ladies, how are you?
Good. How are you?
I'm doing better because I always like this idea of controlling expenses around this time of year. So, Kristen, let's start with you. You're the CEO of Greenpath Financial Wellness, nonprofit. We'll talk about what you guys do here in a little bit, but I want to talk about No Spend November. So tell me about how this idea came about.
Sure. So we decided to run a contest to try to engage people over social media to adopt new habits and try new things. And so we ran a contest with our employees, and Dusti Young submitted the winning idea, which we were super excited about because one of the things we do at Greenpath is we really try to incorporate behavioral economics into our work. So like really understanding like what drives people's behavior and, why do we as humans do the things that we do? And this idea really taps into a lot of those things like gamification. So like humans, we really like playing games and things like that. And so I was very excited to see her idea.
Dusti, so it was your idea. How did you come up with this idea of No Spend November?
For me, I'm a podcast junkie, and I think listening to shows like Stacking Benjamins and Bigger Pockets Money and Paula Pant's show, it illustrates this idea that we need to share information. And the more information that we can share, and in my role at Greenpath, I go out and I work with people on how to teach others and really encourage them. And the question we're always trying to ask is, how do we get them to show up at the party? How do we get people excited about money, and how do we give them information in a way that they're going to consume it? So that's how I came up with the idea, was listening to all these podcasts and listening to all these ways of sharing information and thinking, gosh, let's just put it into 1 month. Let's give people little tips that they can act on. Let's make it quick and easy, bite-sized pieces of information that we can leverage behavioral economics and hopefully give people a little bit more so that they can live a better financial life.
Dusti, though, you can't include Stacking Benjamins in that list because you're going to ruin our reputation. People never learn anything through us.
I know, especially not from OG.
Absolutely. You just got to back away from that. But let's talk about, where do people mess up, Dusti? Where do you see people really struggle with their spending?
I think a lot of it is unawareness. There's 2 phrases that I love. One is you don't know what you don't know. And for a lot of us, I think we just don't know any different. We grew up thinking that overdrafting was common, or we grew up thinking one line of thinking. For example, I grew up in a small town in northern Michigan, and there's one financial institution, there's one grocery store. You don't know anything about investing. You don't know anything about growing wealth or how to manage your money. That's not taught anywhere. So you don't know what you don't know until you're introduced to new ideas. And the other thing is you don't know what you know. I mean, if I were to talk to you, Joe, and ask you about how much you've learned in the last 10 years, you probably wouldn't have any idea where to start. And that's because it's normal for you now. Balancing a checkbook is normal. Knowing where to get your credit report is normal. And we have to change that approach, because if we don't, we're not going to give people information where they need it.
That's funny because, Kristen, I want to bring you into this conversation. I know that half the struggle for you has to be to get people to pay attention so that they can actually do better with their money. How are you guys fighting against that struggle to actually find your audience?
Well, we actually get our audience from a lot of places. We partner with a lot of financial institutions who send people to us, but one of the greatest places that we do get people calling us is from friends and family referrals. So while it's not common for people to want to talk about money and talk about debt, sometimes when somebody ends up in a situation where they're reaching out to Greenpath and Greenpath's able to help them with their situation, then they talk to somebody else and say, hey, I've been there. Greenpath's really helpful. They're not judgmental. They're super empathetic. I think, the first step really is being that friend on the other side of the phone. So when somebody reaches out to Greenpath, they're really going to learn that they're not alone and that whatever situation they're in, it's not their fault. These things happen, situations happen, and that they're going to be okay. And we're going to work with them to come up with a plan that's going to make their situation better.
Here, the next 30 days, you're going to be giving out some practical tips to help people be more mindful about their spending. And obviously, we're going to want people to tune into that. We'll talk about how they do that in a few seconds from now. Kristen, what are some of those tips going to be? Lead us through it a little bit.
Sure. So one of the things I love about this is just even the mindfulness of hashtag No Spend November. And it's funny because my husband and I about a month ago started doing this too, not under this way, but we were saying hashtag DBS, don't buy stuff, or another word there, right? So as soon as I saw this, it clicked with me because that made a big difference for me and my husband when you get sucked into something because there's a coupon or whatever. And then you pause and you go, wait, hashtag DBS. Okay. And so hashtag No Spend November can have that same kind of thing. So, one of the first things that we're going to start with is starting with why. So if people really think about what's important to them, what are their goals, and write it down, that really sets your why and your intention. So you know why you're going to participate in No Spend November and makes it bigger than just being part of No Spend November.
Dusti, we're going to see a lot of specials coming up around Black Friday, the second half of this month. We're even here on Stacking Benjamins every year. We have on a couple of people talking about where to score those deals. If you're trying to spend no money, how do you make sure you don't get tripped up by all the awesomeness that's going to happen Black Friday?
Well, I'm hoping that you're going to tune in before Black Friday so that you take advantage of some of the tips like setting up your environment for success, deleting all the apps, unfollowing all of those deal sites, and unfollowing people on Facebook where they're advertising the deals. I think it is about shifting that mindset and just pausing for a second before you make the purchase. And if you don't have the app on your phone that tells you about it, if you don't get the email because you've unsubscribed, you've got a pretty good shot at being successful.
Kristen, who is your audience for Greenpath and who should come talk to an organization like yours?
It's really anyone and everyone who wants to improve their financial health. Now, we've been around for 60 years. We're a nonprofit. We really specialize in helping people make more sense out of their debt and end up in a better situation with their debt, especially credit card debt or mortgages and things like that. But we really can work with anybody to understand, your situation. You want to improve your financial health. What are your goals? And then we can work with you to give you an action plan to help you get there.
The website is greenpath.org. How do people get involved with No Spend November?
I did want to add something. As we're thinking about who should get in touch with Greenpath, I think anyone that wants access to a financial coach should absolutely be calling us. Sometimes we don't have conversations about money because we're afraid that we're going to be judged. Well, if you can get free access to a financial coach, you should be calling us. Or if you know someone that you've been telling, hey, I really think you'd be better off financially if you did X, Y, and Z, and they're not listening, tell them about Greenpath. And how they can get involved with No Spend November is to simply follow us on Facebook. Through that, we're going to post a tip every day. They can follow us on Facebook and Twitter at Greenpath Financial Wellness, and then the hashtag is No Spend November.
Now, Dusti, you must have won some prize for coming up with this idea. I don't want to put Kristen on the spot here in front of, both of our listeners, but what type of a prize did you win for having the winning idea?
It actually wasn't about a prize. It really was just about making sure that we could spread the word. So they did give me a budget to make it happen, and they gave me the full support of the marketing team, which I'm extremely grateful for. And Kristen mentioned earlier, we work with a ton of different financial institutions. So this is a great platform for us to just share out and really help them spread the word. And they see people every day that, you know that maybe they're not doing what they want with their money. Their money isn't working for them in the way that they want it to. They may be overdrafting. They may not be able to get a loan. They might be opening up a checking account or getting their first car loan. We want to make sure that everyone is successful. And so for me, that's what I get. I love what we do. It's really exciting to me, and I've been with Greenpath for a long time. So those stories that Kristen talks about, where we see people become successful, we watch them pay off their debt. I grew up at Greenpath, and I navigated through some stormy situations myself, and I did that with the help of Greenpath, and I just want everyone to be in that same situation.
Well, I love your enthusiasm. I love your mission at Greenpath. And by the way, we'll link to your website, greenpath.org, also to your Facebook and Twitter pages. And obviously, this is a pretty exciting time. I love this idea of No Spend November. So Dusti and Kristen, thanks for hanging out with us for a few minutes.
Hey, thanks so much. Have a great weekend.
Hey there, trivia fans. I'm Joe's mom's neighbor, Doug. And today, we're celebrating the birth of radio. You know, I love old radio shows as much as Paula Pant loves Star Wars references. So let's just cozy on up to today's old-time radio question. Not counting tests and government transmissions and stupid, boring stuff like that. In what year did the first radio broadcast meant for consumers happen? I'll be back with the answer in just a moment.
All right, guys, we explained the complicated rules to this game backstage while Doug was reading the question. And I think we'll go ladies first in terms of choosing. Kine, actually choosing what order we're going to go in. So Kine, since you're the guest here, would you like to answer first, in the middle, or last?
Middle.
She'll answer in the middle. Splits the difference. Nick, you're also a guest here. Then would you like to guess first or last?
Oh, I want last, Joe.
He's going to go
sure.
last. He's going to screw everybody over on this game. Paula, that means you go first. So Doug's question, the first radio broadcast meant for consumers, what year was that?
Oh, geez. Well, there was some president who did fireside chats.
I think that was Jimmy Carter.
And so the first radio broadcast, it was Chester A. Arthur. No, would have happened before the fireside chat president. And unfortunately, I can't even name who that president was. Oh, goodness. I'm just going to guess 1940?
1940, first radio broadcast. Kine?
I'll go with 1932.
Where'd you pull that from?
Nowhere. Let's just go with that.
Okay. Joe, what happens if we all go over?
Then nobody, then, I don't high five any of you because I didn't tell you that a big high five over my dad's shortwave is what you're winning. So, yeah.
Okay. I don't know. But I feel like there was a big transition from radio to television in the middle of the century. Okay. So I feel like that's a thing. And so that means that radio needed to be around a good bit before that, right? So I'm going with 1919 because that sounds like a cool number.
Well, thanks to Slack for supporting Stacking Benjamin. Slack is a collaboration hub for work. We use it here in the basement. But you don't have to be making podcasts. It's for whatever work you do. With Slack, the right people in your team are kept in the loop, and the information they need is always at their fingertips. I see people all over the place talking about Slack. Just yesterday, Brene Brown talking about her controls and keeping track of time. And initially, she set some hard and fast rules about delegating, and they didn't turn out to be right. So she changed them to make sure that she was always available via Slack, is one example of how Slack is used because of the fact that wherever you're at, you're in the loop. Information you need, as I mentioned, is always at your fingertips, and teamwork happens in channels, letting you organize conversations and information around projects, offices, and teams. And because everything you need to work is in one place, it's faster and easier to get things done than having a bunch of browser tabs open. With Slack, your team's better connected. Find out more at slack.com. So because the fact that there's real-time messaging, I'll give you an example. We have a meeting that was scheduled for 2 o'clock. I couldn't make it at 2 o'clock. We had an interview scheduled for them. I was able to talk to Gertrude and also to Caden, who takes care of our money in the morning stuff, very quickly about moving that meeting to 1:45. Didn't have to go to a separate messaging app. It's in the same place as the last discussion. We also thought it would be funny to tell people that follow us on social media that just like day old bread, I was at the grocery store and I saw this stand that had all kinds of discounted items on it. And I thought, well, wouldn't it be funny that we need to clear space for the new podcast? So Gertrude and I had a very quick discussion about why don't we on social media tell people that, hey, to clear room for tomorrow's awesome podcast, we're going to offer yesterday's podcast absolutely free, limit 1 listen per customer. We thought that would be funny. Once again, on Slack, same channel, talking about another social media thing. But we've got all of these different channels, and I know immediately when I turn on Slack who's talking to me about what. As an example, this piece right here, Steve, in a channel between he and I, Steve, our engineer, said, hey, you haven't talked about Slack yet for this episode. Bam, here it is. We're doing it. So I love the fact that I don't have to search through a bunch of emails for that one follow-up, or I have to search through multiple systems to find what I'm looking for. Don't have a bunch of tabs open. Don't have a ton of different platforms. I can drag and drop file sharing that works with all the apps that I use. You might use things like Jira, Salesforce, Zendesk. I use Google Drive as an example. Plus, you can tailor Slack to work with more than 1,000 apps for video meetings on the go. As an example, we use Appear.in, and that also works with Slack. So because it works on my desktop and it also works on my phone, there's mobile apps for iOS and Android that sync seamlessly. I can always pick up where I left off no matter where I'm at. So Slack, where work happens, learn more at slack.com. That's slack.com. Also happy that Magnify Money is on board with Stacking Benjamins. You know, Magnify Money is our longest sponsor, and there's a good reason for that. I'm working on a project right now, actually, where I'm talking about credit and about the problems of credit and establishing credit and keeping your credit good. And Magnify Money is a place to go to make sure that you're in those right financial products that help you take care of your credit. In fact, there not only is a money personality quiz at Magnify Money, if you take a look at the Learn and Take Actions tab, but there also are student loan refinance calculators, credit card payoff calculators, personal loan calculators, calculators about how much house you can afford. I'm in the middle of buying a house right now. But they're also, to our point here, a credit score guide, which helps walk you through creating and maintaining a high credit score. That's not all, of course. As always, we're going to look at savings account rates like we do here every week. And I'm going to click over there right now. Let's see what the top savings account rate is now. It's still 2.50, but interesting. Popular Direct now is at 2.26. Interesting thing about Popular Direct, like EBSB Direct, which is at 2.5, there's a $5,000 minimum deposit. With Popular Direct, they get a score of F on their fine print. That's what I love about Magnify Money. Not only can I look at what the best terms are, what the deposit is, what the APY is, I can also see just how much financial mumbo jumbo there is. StackyBenjamins.com/Magnify Money. Use our link, as Mom said, to tell them we sent you. That's StackyBenjamins.com/Magnify Money. Okay, so Paula, it looks like Nick and Kine both think it was earlier than your 1940.
Yeah, I'm starting to second guess my decision. 1940 might have been too late.
Well, too late now, girlfriend.
I know, right?
Sucks to be you. Kine, 1932, you thinking that's still like that?
Yeah, I think it's too early. I mean, too late.
You think it's too late also. Nick, 1919?
Yeah, I just like the number, Joe, and I think it's close-ish, maybe.
All right.
Close-ish.
Well, we'll see who's close-ish here. Here we go. Doug, who's our winner?
Hey there, trivia fans. I'm Joe's mom's neighbor, Doug. And if I were nearly as old as Joe, I'd make some sly reference about the Jack Benny announcer, Don Wilson, being the heart of that early time radio show. But I don't know who any of those people are, so we'll just get you to today's trivia answer. Here was the question. In what year did the first radio broadcast meant for consumers happen? Christmas Eve, 1906, Reginald Fessenden had the first radio program broadcast from Ocean Bluff, Brant Rock, Massachusetts. They should really think about renaming that town. Ships at Sea heard a broadcast that included Fessenden playing O Holy Night on the violin and reading a passage from the Bible. That was the first transmission of what is now known as amplitude modulation, or AM radio. Get it right? Hope so. Then you too can bask in the glory of knowing trivia that I'm sure is completely relevant in just about all of your friends' lives. Oh, I got it. Now is a great time to share with Joe's mom the amazing story about how the phrase Netflix and chill came about. See ya!
Yeah, I don't think that means what you think it means, Doug.
Inconceivable.
Yeah, good luck with that, Doug. 1906.
Whoa.
That's early. That's early.
That's radio. Yeah. Wow.
Wow, I was way off.
So it's like
But if
90.
you want to sound old, say chill and Netflix like I did this weekend.
1906. That means that like the 100-year anniversary of the first radio broadcast was right around the time that podcasts were starting to become big.
That's right. Yeah. Yeah. How about that?
And then 101 years, we get Facebook. So there you go.
And now we have these devices we watch cat videos on. It's amazing how far we've come from the first days of radio.
And you say how far, because radio is not far. It's the opposite of far. Podcasting is very far. It's global.
That is true. It's so weird. You know, you had to have that signal. And now you look at our statistics. We were looking at this just a couple of weeks ago. People are listening to this in 48 different countries. Isn't that? It's just weird to me. Hey, I guess somebody dialed a wrong number because they left us a voicemail, guys. That means they need help with some financial problem. I don't know why they'd ask us, because people never learn anything on this show. And this segment is brought to you by Stacky Benjamin Stacker. Stacker comes out nearly once a week. It's everything going on in the basement for the Stacker. StackyBenjamins.com/Stacker. And Paula, you found out about Fireside Chats.
Yes, through the power of Google. I looked up the Fireside Chat president. It's FDR. The Fireside Chats were a series of 30 evening radio addresses given by FDR between 1933 to 1944.
And now you're feeling proud of yourself again, aren't you? Because you said 1940, which was when the Fireside Chats were happening.
That was clearly why I chose it. I just didn't realize that the Fireside Chats came so long after the advent of radio.
You clearly just had that mixed up in your brain. You really thought it was 1906.
No, I had no idea it was going to be that early.
Well, let's see if we can do a better job, though, answering this question. This one comes to us from our friend David. Hey, David.
Hey, Joe and OG. This is David from Tennessee. I'm leaving a job at a large financial institution to go to a smaller tech startup. My current job offers 6% 401k matching, and over the last few years, I've been maxing that out at $18,500 per year. My question is, my new firm doesn't offer any 401k matching. Should I still keep on maxing out my 401k at my new job, or should I be focusing on other retirement accounts at my new job? Interested to hear what you guys think. Hopefully I'll learn something.
Hopefully, David, but you never know on this show. Luckily, we've got some guests here, so that'll help. Kine, what do you think? He doesn't get any match at the 401k. What should he do?
I say if he still needs the tax savings, then, why not? I mean, I love a good match, but if he needs to put some money away to lower his taxable income, I'm just curious as to what the other retirement options are. Because he said did he say a small tech firm? I sometimes think that's about options. That's probably some, stock options or something. I don't know what those other retirement options could be that would be more beneficial than his 401k. But that does interest me. It makes me a little curious. But I say, why not? Why not take advantage at least of the tax savings if he needs it?
That's interesting. Nick, do you think there are any other retirement vehicles for David that would beat putting money in the 401k?
Yeah, I don't know about through his job. If I was in this situation, I think I'd probably, if he's investing 18.5 and maxing it out, then I would take at least 5,500 of that and max out an IRA or a Roth IRA, depending on the tax advantages he prefers. But I would at least max out the IRA just because you can control what you're investing in a little better there. And the new tech startup, depending on who their custodian is, they may or may not have great options as far as the actual investment. So I would at least do the IRA, I think.
Well, let's be clear about the IRA, though. He doesn't get the pre-tax nature if he makes too much money. So the best option there, Nick, would be do the IRA, but then turn it into a backdoor Roth IRA, which is a term I still hate. I can't stand that term.
I know. I wish we'd come up with something. Geez.
There's got to be a better way to say that. But he could flip that over to a Roth and then make it great. But that first step by itself, I don't like, but I like where that heads, Nick. Paula, what do you think?
Yep.
Any better idea?
I was going to say exactly the same thing, that I would prioritize first contributing to an IRA, ideally if he qualifies for one, a Roth IRA, simply because with either IRA, whether it's a traditional or a Roth, he gets more control over that money. He gets to choose what brokerage firm it's invested with. And of course, if it's a Roth, then he can withdraw not that he should, but he could withdraw the principal portion at any time. So there's a little bit of additional flexibility that's preserved by virtue of investing in that type of retirement vehicle. So what I would do is first invest money in an IRA, and then with whatever's left over, go back to the 401k, unless he has other ambitions of, say, purchasing a rental property, in which case I would start setting up a savings account specifically for that.
So you're saying it depends on his goals, that's
the piece of the puzzle that he didn't directly address head on is what exactly are his various savings and investing goals? Is it purely that he wants a market-based traditional retirement, or is it that he wants something else? Because if he wants to buy a rental property, if he wants to have a better funded emergency fund, if he wants to have some portion of his portfolio that's in a taxable brokerage account so that he can access it a little bit earlier and with less headache, those would also be factors that would influence not putting money in a 401k.
Yeah, which goes back, Kine, to what you were saying, which is then it goes back to what else is available at work? What can what are your options?
Yeah.
And
usually a small tech startup, not a lot of options, maybe the options that come with the stock options that I usually see in like the contract.
Yeah. And does that change at all, Nick or Paula, if he's got the Roth 401k available?
Well, I think that the question traditional versus Roth is in many ways it's personal preference. There are strong arguments in either direction. So I would not make the Roth 401k versus traditional 401k. I wouldn't make that the deciding factor. He could do the same with an IRA. He can either, depending on his income, directly contribute to a Roth IRA or contribute to a traditional IRA and then execute a backdoor Roth conversion.
I think
the only thing that might prevent him from doing that is if he has so many assets in other IRAs that he couldn't convert a significant enough amount, because you can only do a conversion on a pro rata share of your total IRA assets.
I think this is a little bit, just for me to weigh in a little bit, David, is on know yourself also. I like what everybody said so far, but also know yourself. If you're somebody that will go ahead and invest in outside investments and do the things to set up the IRA outside of work, I would do it. But I know a lot of people that just don't do it. They just don't do it. And so make it as easy as you can on yourself, because I think that these are also a difference between good and great, and mom always says, don't make good the enemy of great. And, this idea about not getting a match, I see a lot of people not invest in their 401k because there isn't a match. Let's be clear. The match is just icing on the cake. Yeah. That pre-tax nature of that investment is pretty damn cool. And it gets cooler. Cooler is a technical term, by the way. It gets cooler the more money that you make, the better that tax break matters. So I'm not that, the match I don't worry about all that much. Thanks for the question. If you've got a question for us, head to stackingbenjamins.com. And you know what? At the top of the page, you'll see questions for the show. Click that link and you'll see all the ways you can interface with us. And David would get a Greatest Money Show on Earth t-shirt, but I don't see his, David, I do not see your email here. So send me your email address and we'll get that out to you. That's going to do it, guys. That felt short. It felt like we just got here, but I'm sad to say we got to go. Kine, thanks so much for hanging out with us again.
You're welcome. Thanks for having me. I almost don't want to go.
No, we don't want you to go. So tell me, you have an awesome podcast also. Tell us what's going on at the podcast.
Yeah. So I have Prosperity Report, Love and Money podcast. It's a relationship podcast, but we also talk about your relationship with money. So and the good thing about right now is that we're going into our next season and planning for the new season and all the love topics we're going to have that you kind of need money for.
Awesome. Well, then it's a good time too for people to get caught up on season 1 as well.
Absolutely. Where I talk about how money can buy happiness if you know what truly brings you happiness.
Oh, nice. Nice. Well, money might be able to buy us happiness, but it can't buy us Nick True. So thank you, Nick, for, I don't know if that even makes any sense.
I would go with no.
Every man's got a price, Joe.
Thanks for hanging out with us, Nick. What is
I'm glad to be here, Joe.
You've got these crazy YouTube videos that always seem to be from a campground somewhere, or next to a beautiful river, or in a woods somewhere. Tell me what's coming up next at Mapped Out Money.
Yeah, honestly, we're hanging out in the Southeast, probably through the holidays right now, hanging around with family for the most part, gearing up to go. I'll probably sneak on down to Florida, maybe in January, but. Yeah, Mapped Out Money right now. Hannah and I are focused on just putting out more YouTube videos. We're thinking about maybe launching a podcast early next year about also talking about maybe relationships and money, and it'll be me and her doing it. So if you're interested in that at all, look out for that. But yeah, if you're interested, Mapped Out Money on YouTube. We're all the time putting out cool little fun videos all about money and travel and budgeting and how to get ahead.
They are fun videos. We'll link to those and to Kine on our show notes page at stackingbenjamins.com. Paula, what the heck's going on at that crazy Afford Anything podcast?
On the Crazy Afford Anything podcast, we have an interview with Clark Howard.
Who? Clark who?
Clark who? Exactly. So Clark Howard, for the two people who haven't heard of him, is a very popular radio show host. And did you know that the radio was invented in 1906? So he hosts a syndicated radio show. He's a frequent on CNN headline news. He's one of the bigger names, the bigger celebrities in personal finance. And so I asked him the same question that I asked Susie Orman. I said, Clark, have you heard of the FIRE movement? And we kicked off our interview like that. You'll have to tune in to hear the answer.
That'll be fun. Might not be quite as controversial an answer, I would imagine.
Yeah.
Clark doesn't have quite that same personality delivery style.
No. Fire. He certainly has a very cool delivery style, but yeah.
Oh, yeah. He's got a great one. He just doesn't have the same one as Susie Orman.
Right.
Yeah, the same fire.
Right. Right. All right.
And Joe, talking about emotions, I do have a money quiz for those who want to know their money personality.
Awesome.
Quiz. Yeah, so they can go to kinecorder.com/new-money-quiz.
New-money-quiz. You spell Kine, Kine, Corder. And we'll have a link again if you're walking the dog or on your morning commute on our show notes page at stackingbenjamins.com. Thanks for playing, guys. Doug, take it from here, man. What should we have learned today?
Sure thing, Joe. Why don't you just get back to explaining obscure pop culture references to Paula? I'll tell everybody what they should have learned today. First, take some advice from our roundtable and think about the psychology of the average investor before making financial moves. Are you falling into the same trap that's tripping up everyone else? Maybe it's better to move against the grain and your emotions. Second, worried about how much the holiday season is going to cost? Latch on to #No Spend November with our friends from Greenpath Financial Wellness, and hopefully you'll spend less money and create some great financial habits this year. But the big lesson? Don't try and sneak a Boba Fett reference past Paula. While she has no idea who Boba Fett is, she will know that you're trying to put one past her and she'll complain to Joe's mom. What a total tattletale, Paula. Jeez, you suck. Special thanks to Kristen and Dusti from Greenpath Financial Wellness for chipping in on today's episode. We'll link to Greenpath Financial Wellness in our show notes at stackingbenjamins.com. Thanks also to Kine Corder for joining us again on the show. Worried about how your emotions are affecting your money? Or worried about your relationship with money? Check out Kine's podcast, The Prosperity Report, right here where you're listening to our show. Thanks also to Nick True from Mapped Out Money for joining us. Check out Nick's YouTube page by searching for Mapped Out Money on YouTube.
Paula Pant appears courtesy of AffordAnything.com.
This show was created by Joe Salsihai, produced by Richie Rutter-Reese, and engineered by the amazing Steve Stewart. Online, visit us on Twitter at @SBenjaminsCast or on our Facebook page. I'm Joe's mom's neighbor, Doug, and I'm pretty much the guy in charge of everything around here. Trust me, this well-oiled machine didn't get like this all by itself. SB Podcasts may receive payment on the show from sponsors and guests in the form of books, giveaway items, discounts, or other remuneration. There's no way you would take advice from these dorks, but like Joe's mom always says, don't take advice from people you don't know. This show is for entertainment purposes only, and before making any financial moves, consult with a real financial advisor.
Welcome to the after show. This is the part of the show that doesn't exist. Kine and Nick, what happens in the after show stays in the after show. We don't talk about it. And for people out there, if you decide that you have to talk about it, which people have, and I can't figure it out. I can't figure out why.
It's like the first rule of the after show.
I know. We don't talk.
Group therapy. That's the first rule of group therapy.
We did. Is that what you tell people? Welcome to group therapy.
Yeah.
Yes.
Yes, it's confidential.
What happens stays in group therapy. The I will say this though, much like Kine, you talked about your emotions will spill out. If it's got to spill out, just call it dessert, and then people will know. All right, if you have to. So, but we talked a lot about emotions today, and on a recent live tour, we talked about people making dumb emotional moves at the end of all those live shows. I thought that we'd do a little bit of that here, but not about money decisions, just emotional decisions you made. So, Kine, you got one?
Yes, and I hope I don't get shares remorse because I've never shared this before. Only my best friend knows.
Perfect.
Because she was with me.
Well, that's okay because
I bought my.
Hey, Kine, before you start, it's fine because nobody listens to the show, so you're good.
Yeah. That's true. Yeah. So only like 1 million people will know the story and my best friend.
That's right.
So when I bought my very first house in my 20s, I'm like, I go take my best friend. I drive her by the house. We get up to the house and they're like for sale signs and flags and decorations and all kinds of things on this house that I have a contract on. And I'm pissed. So I'm like, we're taking these flags down. We get out my car. We take all the decorations off of the house. We neatly put them in the backyard, though. I will say that. I get in the car. I call my realtor and I'm like, you are not going to believe what happened. I drive up to the house and they have for sale signs. They don't even have that it's under contract. And they have flags and decorations all on it. And she's like, oh, yeah, we do that when we have a contract on the house to get people to call about it. So then we can say, well, that house has a contract, but I have another house I can show you. I'm like,
Oh my gosh.
can I call you back? I had to put all that stuff back on the house.
Oh, that is so funny.
That's really funny.
Talk about embarrassed. We were hanging that stuff back on the house.
You called in chewing them left and right.
Oh my God. I was about to give a piece of my mind. She was like, oh yeah, natural.
Yeah. Oh, that's so great. And you're putting your whole foot right in your mouth.
Exactly. I didn't even tell her immediately. I was just like, let me call you right back.
Paula, you've never made an emotional decision before, have you?
Oh, plenty. Like that case of Laurel and Hardy videos that I ordered. So I'd been traveling for the last month, right? I went to Burning Man, came back. I was home for like a week and a half. Then there was this big concert that went on here in Vegas. So I had a bunch of people from out of town come to visit. They came, they visited. That took a huge amount of attention. They left. 24 hours later, I fly to Orlando, do the live Stacking Benjamin show, go to FinCon, then Clearwater, then London, then Edinburgh, then California. I got home like a couple of days ago, and I'm just exhausted because I've been on the road for essentially 2 months, trying to balance work and podcasting and the Susie Orman episode going viral. Like, I have not had a break. I haven't been sleeping much. I haven't been anything. So I get home 2 days ago. There's been this $130 bottle of wine that I have wanted for a while. And I was like,
almost exactly 2 months.
In fact, okay, so here's what it is, and this is super embarrassing, but exclusive to the Stacking Benjamins after show. All right, as longtime Stacking Benjamins listeners know, I have a slight obsession with the British royal family, and you'll You'll know this because at the end of every year, if you're a longtime listener, you know that when we ask questions of the Magic 8 Ball, I always ask a question involving the royal family. So Meghan Markle had a blog that was called The Tig. The word Tig is a reference to Tijanello, which is a certain type of $130 wine. It's a certain brand of wine. And so ever since I learned about that, I've always wanted to try this wine. I was like, what is this wine that is so good that Meghan Markle named her blog after it? But I resisted because that just seemed like a ridiculous way to spend money. But I've wanted this ever since I heard about it, at least a year. No, maybe not a year. At least since like January or February, we'll say. I've wanted to try this wine. And so 2 days ago, I finally, in this fit of exhaustion and in this fit of like, I just want to do something for myself, I went online and I ordered this bottle of wine. And just now I got the notification that the box has been delivered.
All right.
Yeah.
Like while we're recording this.
It just before we started recording this.
So yeah. Paula may not finish the after show.
That's right. I'm surprised she made it this far. That's fantastic. Nick, you've never...
Now I'm all curious.
I know, me too. You need to share some of that, Paula. We should have had this at your place.
I know, right? This 130 I've never paid. I mean, I'm like a Trader Joe's $2 Chuck drinker.
Oh, wow. This is going to be so awesome.
With her
That's Olivia Pope.
I was thinking about it actually after I ordered it. I was like, I don't even know. Do I need like a decanter to be able to get the most out of this? And then I was thinking of, what's the parable of the guy who ordered a robe and then the robe was so nice that he had to upgrade his whole home. What's that called? Begins with a D.
I'm not sure about that, but I know give a mouse a cookie, okay? And then he's going to want a glass of milk.
Exactly.
Right.
Exactly.
Oh, I'm so afraid for you. If you drink it, you're never going to drink $2 Chuck again.
No, but she might get a decanter and start decanting that $2 Chuck.
No.
I'm definitely not going to. I was tempted to. I was tempted to get a decanter and get all of this stuff. So I was like, so that I could thoroughly enjoy this wine in the way that it's supposed to be enjoyed. But then I remembered that parable and I was like, no. There's a lesson about this. You do not start upgrading everything else just because you've upgraded one thing.
I know. Here's how you drink a $130 bottle of wine. – With a paper bag and a straw. It's the perfect.
I thought you were going to say with friends.
Well, yes, or that, either or. Yeah, if you're going to drink it alone, though, paper bag and a straw.
Oh, okay.
Yes.
Diderot effect. It's called the Diderot effect.
I did not know that. That one missed me.
Diderot not know that.
I got the Laurel and Hardy, but I do not have that. Nick, how about you? You don't make emotional decisions.
Oh gosh, no, never. Yeah, so there's probably the most emotional story that I can share is
that I can share. I like that one.
We got some.
There's the 7 I can't share.
After show, okay?
Yeah, right.
I actually ruined my honeymoon pretty badly due to letting my emotions get the best of me. And my kind of long story short, my parents were doing a really nice thing, and they bought my wife and I tickets to go on a cruise for a honeymoon. It was great, and we were very excited about that. I didn't really know the full thing about cruises. I thought they were all inclusive. We did not have very much money at all. Just for context, I think we made around $15,000 our income our first year of marriage. So it was like, we really did not have much money. And I knew that, and I was very stressful about unexpected things. So we got on the cruise, and my parents, it's not like they were trying to be cheap. They bought the tickets, and they just really probably didn't think much more of it. And so we got there, and I realized, wow, there's still so much more on here that still costs money. So even if you wanted a drink package that was like anything but water, it wasn't alcohol, even just sodas, that was like, $80 or something like that for the week for each. And so we were $160 there. And then I think we paid a little bit to do an excursion. Then I was finding out, you got to tip all these people. They're not like, it's not actually all inclusive. Long story short, on the first day, I realized this trip's going to cost us close to $300, and I'm freaking out. And really, I shouldn't have been, but it was the unexpected nature of the thing that put me in a bad mood. We started fighting, and we literally ended up fighting for 3 days straight on the boat.
No.
And it was a really miserable time. Even the drive back home, it felt like, what in the world have we gotten ourselves into? Like, this is not going to work. It was the most miserable thing, and not at all how you're supposed to start out your marriage. The good news, the positive news, is that looking back on it now, we're able to really see where our own emotions, or especially mine, like where my emotions are, and then kind of combat them. So like today, I realize, hey, I'm really not very good with unexpected things. I'm a big planner. I don't like it when unexpected things happen. I don't like feeling out of control. And so 1, I've gotten a lot better with just dealing with that and going with the flow. But 2, in our budget, we work in a pretty large, healthy, unexpected expenses category. and that keeps everything nice and even keel for us now. So it was a major learning experience. I look back on it now, and in some ways, I'm glad it happened in terms of, hey, we learned, and we're a lot better off for it. But yeah, I've got all kinds of emotions and money stories. It's a tough world out there.
I think I've seen Kine grin, and I think she's going to send you a gold star for how you handled that.
Yeah, because I was getting a little worried. And I'm like, camera's off. I need to talk to you.
That's right. That's right. Maybe next time, once we're finished here. Right.
That's right.
All right, guys. Thanks for playing.